All right, I want to welcome everybody. I'm Jim Farish. If you've not been on our webinars before, welcome. If you have, then welcome back. Tonight we're going to kind of focus on the desktop that we use with TC2000. And through June, I want to kind of go through TC2000 and look at what scan opportunities, how to use some of the desktops to better. And you can, a lot of the stuff that we do, you can use other software packages to do it. I just find it in Telechart to be the easiest for what we do, and then you'll kind of see as we go through tonight why it's simple, because some of the things, the watch list component within Telechart, to me, is what makes it simple because of the scan capabilities and the overlap between desktops. So tonight, the title really was of this webinar was, herding cats and with the desktop, with our desktop. And the reason I use that theme of herding cats is my dad used to say that all the time when I would do things that was crazy, that it was like herding cats, which if you've ever tried to do it doesn't work very well. But one of the things that as we go through this that I want to try to communicate is the fact that tools are good if you have a plan or a strategy to go with them. So I'm going to start at the simplest level that I know how, which is the 7 asset classes, which I talk about this quite a bit. And this is the the desktop that we have built within there, and there's no magic to this, as you'll see as we go along, other than it simplifies how you can visualize the market. And what all this is it takes the 7 asset classes and it plots them all together. And in this case, we're using VTI for the U.S. Total stock market because it does incorporate, for the most part, almost every stock in the U.S. equity markets. And so it's a good benchmark relative to the orange line here is IYR, which is real estate. And then the light purple line is the EFI index, which is EFA. Turquoise is EEM, which is the emerging markets. And then you got emerging market bonds. Then you have UUP, which is the dollar, and TLT, which is treasury bonds, and then DBC, which is commodities. And those are your 7 asset classes that make up pretty much every investment class. Now, those particular ETFs are about the best diversification benchmark we can use within those asset classes that just give us a good idea really of what's going on, and then we can take it from there to dig down into the components. And what the reason I use these, what I call them scatter charts, is because everything is scattered all over the place. But what I'm looking for is what I call pivot points to start with. So you can see that I use these vertical bars to earmark what I think are pivot points relative to what the market is doing. And they're either going to be highs or they're going to be lows. And the way the pivot points get designated is when we hit a low and we move off of it, or we hit a high and we move off of it going back down. In other words, the market that day has started to pivot the opposite direction of the current trend. Obviously, it has to fulfill whether or not there's a trend change by either setting a new high or new low relative to the pivot point. So the simplicity of it is that the last real pivot point that we're working off of right now is this one on April the 11th. And so what we look for is to scroll back so that we use the pivot point. We'll balance here. So it's the start date is the 11th of April, and we come forward. And what we're looking for off of those is what is leading relative to the market. And because obviously a lot of time has elapsed since that 411, I'm going to bring another line in here, and that would be your next potential pivot point as it started to turn down. But as it came off of this level, I'm looking for the leadership. And in this case, the leadership was VTI, which is the U.S. equities. And the rest were below that. And you can see that realistically REITs popped into that picture, and the EFI index, which has been mirroring the U.S. market for a while, was another part of that. The other 4 asset classes actually were sideways or down, but then that narrows the market down to me. Now I'm going to go look at VTI, I can look at IYR, or I can look at EFA, and I can start to dissect those components, which we'll look at in a second how we can do that. But the point being is that if all I wanted to do was trade those 3 ETFs of VTI, IYR, and EFA, I can now trade them off of the pivot to the upside, and then we can look at how you would get your entry points. But what is important is that you start to look at the market visually. And we talked about in the last webinar a couple weeks ago that you have to also understand the story of the market, and I'm not going to get into that again, and you can go back and listen to that webinar, and if you don't have access to it, you can beg Don to let you have access to it. But one of the things that's important to me is I want to understand why the market is doing what the market's doing at each pivot point and develop the story from the pivot point so that I understand whether or not there's a valid fundamental reason, there's a valid news event, and or there's a valid technical event that's going on in the market that's substantiated by some other rationale. And so people will layer on indicators. I would rather layer on what is the story behind the market. And if you looked at the trading notes each morning, just pop over to our trading notes this morning. This is something that I've started to add the last couple of weeks, is if you scroll past the introductory comments, right here in the center, I keep repeating what the story is. I'll update it every day relative to the parts that are changing, but this is the current story of the market as I see it, based on now I've rewritten tonight's notes, which we've actually started updating for tomorrow's trading notes. So tomorrow morning when these are published, this will be updated based on what happened today. And the biggest change today is you get a validation breakout again on the upside in the NASDAQ hitting a new high. You get the S&P eclipsing another new high. But you introduce small caps back into the picture, which brings the growth stocks back into the market. And so what was hurting the market here, in other words, if we go back and look at this period before we got this pivot on the May the 20th, prior to this, what was dogging the market was the fact that we didn't have any validation of fundamental data on earnings. We had a lot of things that were rumbling around. We still really do not have that, but what we do have is a belief in the market that it's okay. It's going to be okay at some point in the future because everybody's buying into the fact that the economy is going to improve, the market's going to improve, and therefore we'll be able to substantiate higher stock prices. And to me, I don't, that's like fool's gold to some degree, in that we actually are believing the Fed, who hasn't been right yet about too many things, and we're believing the economists, who haven't been too right about too many things, that the market is going to substantiate or validate fundamentally what it's doing technically today. And so that's what the market's moving on. So to me, that's a trade event. That's not really an investment event. In other words, I can't invest long term if the fundamentals don't match up. I have to look at things purely from a technical perspective. When fundamentals line up with the technical data, then you have longer term events and holding periods for stocks or ETFs because you've got substantiation longer term looking out. So all of that together, what we're looking at right now is what's the story of the market, and what's driving the market right now here. I made reference a couple nights ago that I thought we were building the bridge to nowhere, and not that we're moving to Alaska, but the fact is we're building this on no real validation. In other words, there's nothing behind the move other than buyers putting money to work, and they're doing that even at a low volume rate, which means that take it for what it is, make money from it, but you have to tighten stops and you have to maintain what you believe is a discipline going forward. And if I have time to get into some of that, we'll do that tonight. But the focus really is, how am I going to get in and see the market relative to the story that's out there. So develop the story of the market, but then let the charts either validate or invalidate that story as it unfolds. So what you've got right here are the 7 asset classes. Now, you have to back away and look at what is your time frame. This is very easy to change. You can change this if you want to look at this longer term. You can change this to a weekly chart, and the picture changes accordingly. And you can see the longer term uptrend. You can still see the volatility within it, but you get a clearer picture of emerging markets back here in February and March hitting a bottom and then pivoting off of that low. But what it allows you to see, because I look at this, I see it a lot easier, and I can look through all the lines, but you can see that the yellow pivot in treasuries back here in December. You can see the pivot in the orange line off of the December lows on real estate, but you can see the market setting up even if we scroll all the way to where this was only 1 week of data, or on a weekly chart, it's going to give you 5 bars at the shortest point. That would be 5 weeks of data relative to what the market's doing, but you can condense the time frame or expand the time frame as long as you and short as you want it to be. So you'll have total control of what data you're looking at. We tend to start with the daily data unless the longer term trend lines make sense to look at weekly charts, which they do right now in the U.S. markets, because we're really still in an uptrend off of the 2009 lows. So we're in a 5-year uptrend. If you look at the weekly and monthly charts, that really has not broken. Off the daily charts, we're still validating the uptrend off of the November 2012 lows. So you do have long-term trend lines in effect today in the U.S. equity market, but a lot of people are talking very short-term about the market, and I think that sometimes that's a mistake. We updated our 401k newsletter today, which gets updated once a month, but the focus there is long-term. So we're still looking at 5-year charts when we update that material, and what we're looking at relative to a forward progression relative to how the 401ks are invested. So you really have to back into the time frame. That's the first part of it. And then the second part of it is look at what's leading, what's lagging, and what's losing. And you can see here DVC, it's very easy to see commodities are the losing. You can see the laggards that are stuck in the middle, and you can see the leaders at the top. And so it makes the market a lot more visual relative to what we're trying to do with it. So when we tie that together with the story of the market, it becomes a lot clearer relative to what I see happening going forward. Now, there's another, let's see if I can flip over to another chart. I want to look at, I'm going to change this to VTI instead of SPY. And then I'm going to go up here, and I'm going to, for those of you who have Telechart, you can just go into the comparison overlays, and you can add what you want in here. And I'm going to put TLT in here because I want to show you the dynamics of these charts, even beyond just of a scatter chart to me, or a comparison chart, just beyond looking at a bunch of things. And one of the things that is bugging me right now is that if we go back to May the 11th, put a vertical line on it so I'll make it easier here. Or actually I want April the 11th. Put this vertical line in here, and then I want to make that the point that we start from relative to the view that we're going to look at. And what's my point is that what you have, the green line is TLT, which is the 20-plus year Treasury ETF, and VTI is U.S. stocks. And when you have stocks running and everybody talking about the economy growing and blah, 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 you actually should get divergence between equities and bonds. In other words, bonds should be struggling or going down when stocks are going up. And what you can see is that we've had periods of time where that's been true, but overall, until right here, which is the last 4 or 5 days, based on this period, which is about 7 to 8 weeks, so we're not looking at a real long period of time, but you really haven't had much divergence between equities and bonds. And this has been a comment that's been out in the media. It's been all over the place. You've heard me talk about it, that the bond market is trying to tell us that equities they really should not be at the levels they're at, because otherwise bonds would be diverging down. In other words, interest rates, if the economy is that good, interest rates should be going up and bond prices down while equities rise, because we can anticipate that in the market. So that's just an economic event. But here is the first time, which is on May the 28th, is the first time we've actually seen them start to diverge to any large degree more than 3 or 4 days. And I'm curious as to whether or not this divergence will pan out, especially after the ECB news today. But that's why when I say understand the story of the market, it comes right back to how you look at these charts. And that divergence right there tells me that equities are running, bonds are falling, and that is setting up for the market to run further, which is why we've actually added more money to the markets over the last week and week and a half, is that as that divergence emerges, and if it unfolds to be true, you're going to get a longer-term bull cycle or buyer cycle where the buyers control the market versus the sellers. And if so, that's something to me that is developing right now that's very interesting, that we use these scatter charts to do as well, looking for divergence where it should be versus if it is or not. And it sets up a picture to me that I can see very easily, and that's why I wanted to do this webinar, was to kind of put some ideas out there as to things that you can do that allow you to validate your research and not get stuck in just scanning through charts, but looking at where the stories of the market really are. So right now, what we have, what's working is that we talked about VTI, IYR, and the EFA. We could just stay there, but understanding that most people don't like to just stay there, that they want to go beyond that, is you have to pick which of these that you would like to own. And so if we choose VTI, we're going to introduce, according to IBD, 193 sectors. On Telechart, there's 146 sectors or industry groups. And so we're introducing a lot when we say, I want to dig into this. And so what we've built on top of this is that we can go back over here to the S&P 500 sectors. The S&P 500 has 10 sectors. So what we created was the 10 sectors wrapped around the S&P 500. Now we flipped away from VTI just so we could control it a little bit as to seeing more of the major components of the market, and went to SPY. And I think it gives you a much better picture. But we use the same pivot point here, which is the April 11th pivot point, and bring it forward. And we've talked about this. If you look at the weekend updates on Fridays, Saturday, or Sunday, I generally update what we saw from last week and prognosticate into this week. One of the things that is in there are these scatter charts on all the different components of the market as we break it down. But you can see what accelerated out of this was the white line, which is energy, which is XLE. So you get an acceleration on the upside. And when you look at this, one of the things that, sorry for that, hit the wrong button here. Let me get my pen. When you get the upside, you get the acceleration on energy. And so energy has actually moved progressively higher out of that. So I'm going to make a note here so that I can get this. I want it because my mind's going 100 miles an hour, and I want to make sure I come back to how to do this. But if you look at XLE on the acceleration, you can now buy XLE. So in other words, we went to the 7 asset classes. We looked at U.S. equities. We chose that. And now we're going to come back and we're going to dig into the U.S. equities and say which of the U.S. equities do we think by sector gives us a great opportunity. Well, we know that XLE is one of those, and so we can choose that. But the reason, no idea what I just did. Hang on. Get these things out of my way here. Sorry, I got buttons going everywhere. I need to reopen that. Hang on. This is what happens when you travel and lose your mind. All right. Now, so if we said that energy was one of the things that we wanted to look at relative to this component, I want to go over here to this chart, is that we wanted to look at relative to this component. I want to go over here to this chart, and I want to pull this across, and I want to look at the chart here, and if I put XLE on here, you can see that energy from the 11th, which is right here on this bottom bar, so it's this bottom bar right here, coming forward, you can see what energy is done. Now, because I know some of these are symbols that you will know, OIH is going to be the oil services, and you can look at IEO, which will be the production, and you can filter through even the subsectors and start to pull them up and look at them. Now, if you want to make it easier, then you build a watch list that you can do under the personal watch list, and you can build your own energy watch list. Now, because I'm on a different machine, you would just, if I have it in here, I would just go in here and click on energy and the subsectors. I have a watch list built of all the subsectors of energy, all the ETFs. And so you can actually set them up. Once you have them in place, it's easy to go and pull that data. So you always have the opportunity. The other side is, this is a different desktop I'm going to go to. And you can see that what I do is build all the watch lists, build all the desktops so that I can flip through them quickly. And if I come over here and put XLE in here, to the right here is all the holdings, 43 holdings inside of XLE. I also can click right here where it says XLE, a member of, and it would tell me what it's a member of. But because it's an ETF, it should be empty, which it is. So, you know, when you look at, if I've got a stock in here, which BTU is the #1 performing stock on the top of this list for whatever reason, but if you take that, it bounces off the low. I can also come back here and ask it what ETFs BTU is a member of. And you can see that now I can see all the ETFs that BTU belongs to, and I can quickly filter through those and see if there's any that interest me relative to the oil sector, so or energy. So I have a simple way of going back and looking at what is in each ETF, but I also can build my watch list of ETFs that have all the energy stocks. And one way people say, well, how do you find them? One of the nice things about Telechart is that if I type in energy, it'll start to give me the ETFs or anything within that world. I can type in oil, and it will pull up other ETFs. As long as that, I can type in gas. It would start to pull up all the things that come up with that. But you can start to filter it. And the other thing I would recommend is that you Google ETFs with energy, or energy ETFs, and just so that we can, so that you think I'm not losing my mind, which I am, by the way. And you put in, and you can go in simply and Google energy ETFs, and you can see that they'll come up, you know, the best energy. So there's an easy, I mean, use the tools that are out there, and then take those and build your own watch list. So you can simply create your own watch list by creating a personal watch list, and you can type in energy and click OK, and then to add the symbols, you just add XLE, OIH, IEZ, IEO, you know, I used to know a bunch of them, but now because I'm speaking. But anyway, you get the point. And now that I have it, it's there. And if I close it, it's gone from the desktop. But I can open that by simply going back to my personal desktop and scrolling down and looking for energy. And you would find the energy ETF by just clicking on it. It just comes back up. So no matter what desktop you're in, you have access to that energy ETF. And you can then, if you click on XLE, then this list will correspond. If I click on OIH, this list will go to the holdings within OIH or IEZ, and you'll see them come up on the right side. And you now have all the stocks at your discretion relative to doing that. So each one of these allows you to do that. And then all I did was build different, you can see different tables within the watch list of things that I want to be able to scan quickly. And to add those, all you have to do is come down here and you can click on My Conditions. You can click on Fundamental Data if you want to add it. If I want to know what the 5-day price trend versus the market, I can click on it. It adds the column to the right. So you can set up your scan list or filter list any way that you want it. But the key to me is that it all comes back, and it starts with the fact that we start with the rotation, looking at what's rotating, what is leading, losing, or lagging, and it allows me to put together the components that I want to go and look at now. Remember where all of this started was we started with just 7 asset classes. Then we went and looked at the one asset class that we liked, and then we can take it down to the stock level by going to the other desktop. I just call it a sector rotation desktop, and I set the watch list up within that desktop so that it corresponds with whatever I want to do. It gives me the list of the holdings of the ETFs on the far right over here. It gives me over here anything that I want to look at relative to, I have what is called leader short-term scan that I can run, which is empty. I got an only ETF tracker, which has 21 ETFs in it this is just for a thing that I look at. There's 21 ETFs that I look at pretty much every morning, and these are the ETFs that are the biggest components of the market that give me a quick view of things that I want to own or don't want to own right now relative to what's going on. But I can use this to scan all kinds of things. I have 1030 bottom scan. I have a leaders intermediate term that I can scan and look at relative. This one scans off of the industry groups. So what it does is it allows me to build my desktop in such a way that I can quickly go and research relative to the news, the fundamentals, the technicals, whatever I want to look at. If I'm sitting here today, one of the things that that I look at first thing in the morning is what the volume buzz within. There's a volume buzz piece within here, and I don't know if I have it on here, but let's pull it across. And I can go in and look at this, and I can say, of course, I won't find it because I'm looking for it, but volume surge today. And I can look at what's surging, and I can sort that. So if I run that first thing in the morning, I know what sectors are surging or ETFs are surging by volume. And one of the things that you saw this morning relative to that was that IWM was surging this morning, which you can see that it came out of the box. You can see the big volume right out of the box on the upside. Then we got that little bit of a pullback early in the trading day, and then it started to surge again. But you can see volume decline, and then volume started to accelerate as IWM accelerated. And if you go back, if you pop back to the daily chart here, to me, pull this down to where I had it this morning, right in here around the 112.50-ish level. For me, IWM, if it got above that level today, was a buy. Now, coming into the trading day, that really wasn't in any of the charts. I mean, there was nothing coming into the trading day technically or fundamentally. People were actually talking negatively about small caps. But from my view, I felt if the market was going to move higher, whether it was today or over the next week, eventually small caps would have to become a part of that. And because small caps had not participated, it just happened to be something on my watch list first to see it move back above the 50, take out this is volume at price, to take out all this negative, and then it actually cleared through there. So around 112.60-ish today, I bought some IWM, and I still own it into the close today, and we'll see tomorrow what happens, but the stop is now at 113.79, and then we'll go on with it along the way. But based on the entry, I still have a profit of 80 cents regardless. Now, how did I get there? I got there all the way back to the fact of, click back here. Oop, click the wrong one. On what we were looking at right here with the S&P 500, because I have another scattered chart that I don't think is on this list that we're looking at. But it takes, what it does is it takes the S&P, it takes the small cap, mid cap components of it. So you got IWM and MVV and SPY, and then it will look at other things around those that we tend to classify by group. So there's about 8 ETFs in it, and I will scan those and look at what's lagging and what's leading relative to the market. So you can use scatter charts to build just about anything that you're thinking of right now and look at pivot point opportunities as to where they reside. So energy was the leading pivot point. We got another pivot point on May the 15th, and I want to look at a bigger chart first of this before we go look at that, is look at SPY. And if you look at right here is May the 15th, you can see on April the 11th, we hit a low, we come up, and we tested that. We tested right back to the 50-day moving average, and then we started to bounce off of that, which is the current leg or the current run that we're in. So if we look at the scatter chart, the bold white line, what we see is from here to here, the market rallied for about 4 or 5 days, and then it turned sideways. That was that 4-week period where the market turned sideways and couldn't make up its mind what it was going to do, and then it hit a low on the 15th. It rallied, it tested that low, and then it took off. And so what you get is, if you want to scroll back to the 15th, which is the pivot point we're using now, is what's leading now. Well, now you've got XLY, which is consumer discretionary, is leading the market, and you can see that the turquoise line is tech, which is also leading, and then you got financials creeping up into there. You got IYR, which are XLV, which is the healthcare, and then you've got XLB, which is basic materials, and the rest of them are underneath. So energy, actually off of the last pivot point, isn't the leader. It's now what we see within consumer services, and tech and financials started to take on a leadership role. And now you can look to those. And so that's how we actually build the S&P 500 model, by the way, is that we take pivot points and we build that model off of the pivot points on a short-term rotation right now. I'd like to say I should be in it long-term, and I should be, but the S&P 500 model is actually set up with a 9-month window is what we look at as a holding period, which is short-term. And so it rotates a lot more frequently than if you looked at a longer-term version of the S&P model. It would rotate a lot less frequently, because the trend lines, as I said, really going back to November of 2012, have been essentially to the upside, and that's where we are right now. But right now, where we reside is the S&P 500 has rotated. And the only way you're going to see that is to be able to look at the pivot points and see the rotation. Now, if you use these charts enough, you can start to see that rotation by looking inside of the chart. In other words, if I look right here off of this pivot point, then visually I see the orange line accelerating faster. I can see the yellow line right here off of the 20th accelerating, and I can see the green line taking off the 20th. And then you can also see at the bottom that utilities accelerated off of that same low. so if you look back at the S&P model, you can see where we added XLU, you can see where we added XLF, you can see where we added these components because that's where they come from. They come from these acceleration scatter charts and scanned out relative to what our entry points are based on the discipline that gets them there. But all we're looking for off of these scatter charts is the rotation. And that's really the crux of the matter, because once you see the rotation, digging into this is, from my perspective, the easier part of all of it. So let's go back and just, I want to take this all the way through and look at a couple things relative to what's happening in the current trend. And so let's go back to the 7 asset classes. And I stated that you have other pivot points in here, which are May the 15th. And if we look at this, you can see emerging markets was one of those, but look at what happened to VTI again. So the U.S. market started to lead, which takes, so that's where we go. We start with the 7, then we go to the U.S. markets, and if we come back to this and we hold it, the initial leadership of this, if you look down here, was tech and consumer services or consumer discretionary. My perspective at that point, if we could go back in a time machine without knowing what's going on right now, we would say I would take tech because tech was way oversold. If you go back and look at a chart of technology stocks, they were way oversold. Consumer services stocks were very difficult to want to buy because there was no story behind them. Actually, the retail story was actually pretty dismal from the winter and the earnings and all of the things that were coming out of the retail sector. It didn't give you a whole lot of warm fuzzies that was going anywhere. But tech was, and it really, if you look at what we posted as buys with QLD, that was a tech-driven buy by large cap tech. If you look at, XLK was posted, FDN was posted, which is the internet stocks. And so what we found was tech, without getting into all of it over again, was the piece of these two that we wanted to track in order to buy. Now, what I want to do is do this in a format that hopefully it will help you see a couple things. So what I'm going to do is I'm going to create, if you right-click on the button right here, just right-click on it, it says duplicate. It takes that same chart and duplicates it. And then if you right-click again and say save chart as, I'm going to change the name of this to technology. And so it now becomes technology instead of the S&P 500. Now what I want to do is I want to go to the comparison overlay, and I want to change this because what I'm looking for now is the tech component. So we would look at FDN, which is the internet. We would look at the IGN, which is networking, and we would look at IGV, which is software, and then we would look at SOXX, which is semiconductors, and we'll just throw XLK in there, and then we're going to uncheck these others. And just for time's sake, I would just want to use the ones I know. And then we're going to click OK. And then what we would see is off of the low is that we have SPY is the white line, which you can see that all of these lines are outperforming SPY, which means that it is one of the leaders, and it should be outperforming. But out of the 5 we listed, which of those are outperforming? And you can see that out of the box, it was semiconductors and software. And as it went along, we picked up internet as one of the leaders. So you still have internet, which pulled back, but you still have semiconductors, and software has just gone by the wayside. But what you are seeing is that the semiconductors and the internet components were part of the leaders. And then there was one other thing in here I want to add that I forgot to add in here, is SKYY, which is the cloud computing stocks. And the reason I wanted to bring them back in there is they started out very strong and have moved off. Now, here's what you get out of this, and I'm going to put a vertical line here, is that coming off of that 15th low, we could find ETFs within tech that were accelerating faster than tech. So I could have owned XLK, which is the red line, and you can see that it's kind of in the middle. And or I could pick the subsectors, or I could pick some of all. And so now I'm narrowing down. I went from the 7 asset classes, I went down to the U.S. equities, I went to tech, and now I'm breaking tech apart into components that I like. And out of this, semiconductors, without spoiling the story relative to what's going on and having to go back and recreate this whole thing, what I want you to see is that when you go back and look at all of these, semiconductors had the best trend. They had the best technical pattern setup. They had the best fundamental data relative to PE ratios, relative to the PEG ratios, and some other things within them. But bar none, semiconductors were coming into the May 15th low, the best component of tech, head and shoulders, my opinion, which means that I would want to own semis first and others as a trade. So we still own semiconductors. We did trade FDN. We did trade some of the others in there. But semis, to me, and you could see off of that low on the May 15th low, which is right here, it's only had one negative trading day since May 15th. In other words, the semiconductors have actually traded down one day since May 15th. Otherwise, you can see all the bars are green. And so your regression line is positive. You got an acceleration on the regression line, on a 5-day regression line. But semiconductors have really been, I think, the dynamic component. Now, I've already done this. As I went and you can go right here to a watch list, and you can pull down the SOX index holdings, and you can actually pull them out, and you can look at the list relative to the semiconductors. I went and all I did was pull the top 10 semiconductors, and I think I actually made the watch list so you can see it. If we go to personal watch lists and come down here to semiconductors, right there, you click on it, and there you have the semiconductors. And there are actually 31. When I copied it over, I blew it up. But what I'm looking for are the top 10. And what I wanted you to see out of this list is how I got the top 10 by market capitalization. All I had to do was go in here, and I can type in capitalization, and it would give me that to add to the list, and then I can sort the list by the largest stocks. I flag them, and I can export them, but I basically made a scatter chart with the top 10 largest stocks in semiconductor so that I could look at them and I could see the same thing. MU, which is Micron Technology, broke out on the upside. I can see SanDisk, SNDK, breaking out on the upside, and Avgo was one of them. But you can see that even as we've got along, look here at Broadcom, which is actually was one of the posted egg stock alternatives that we posted on the egg update last Thursday night, and that's done I think 12-15% since we posted it. But you can see what's accelerating very easily off of these charts. And so I've taken this by just using scatter charts. I've taken from the broad market all the way down to the stock level without actually even looking at an individual stock. I'm segregated it down by looking at what of these are running on a comparison basis. That's all I'm doing is comparing them, and I've got other things that we can lay over the top of them. But really the true thing that I'm looking for is the acceleration so that I can find the leadership. That's what most people are looking for, is filtering for leadership or momentum within this. So you have to look at the things that are easier to do relative to all of these things. And that's how a lot, somebody asked me if our subscribers got the IWM buy today. No, because we don't do intraday subscription service. It would be way too expensive for me to do an intraday subscription service relative to what I do every day. But if it's something that we see going into the trading day, I do talk about it. And this is one of the things that if you subscribe to the information that is published, right in here where it says Sector Watch, this is the morning trading notes. If I thought that IWM was an opportunity coming into the day, now I said that coming into the today, I didn't really think it was a buying opportunity. It happened to be one as we got into the trading day. But on the other side of that, I do think that things like TBT, where we did post, I mean, this isn't in any of the model lists, but it's posted the short trade entry for TBT. If that were to pan out throughout the day, it'll give you different things that I'm looking for relative to energy. It gave you an entry level on the SOX. So it goes through UNG. It gave you the actual hit point and entry point for natural gas. So all of these things, when I go through them in the morning, what I see that I think is of interest without trying to overwhelm you, I'm going to post to the list. And then today on the pattern trading list, I posted BAC, PFG, and ANIK, and we did hit the entry on Bank of America, and we did hit the entry on PFG. ANIK we did not hit the entry point on, but we hit the entry on two of those, which got added. And so you can see that we have, I think, 17 holdings right now. And then I wanted to go back to, if you go to the egg model, I run these same scatter charts within the egg scans when we set it up every night. And if you go back down here to the 29th, you can see that right here was the comment on Broadcom and what we were looking for relative to Broadcom. If you looked at that on Wednesday, it didn't hit the entry on Wednesday, but Thursday it did hit the entry point, and Friday it actually went up a little bit, and then Monday, Tuesday, and Wednesday of this week it's actually catapulted up about 15%. But that doesn't make me smart. I mean, all I'm doing is scanning relative to what I'm showing you. I'm just looking for things that I think give you an advantage in the market. Remember that what makes you a good trader, investor, is understanding the market story and then playing within the story and filtering down to things that give you confidence. Those are, to me, what makes the market work. And the more you do that, the better you will get at seeing and visualizing the markets and living within the markets. What I think one of the biggest mistakes that I see traders make today is trying to do too much. And that is we try to see too much. I want to start with the 7 asset classes, and then I want to filter away down from there. And I want to start to look at what's going on within those asset classes that gives me an opportunity. And you can see what I just did with tech, going from the 7 asset classes to the U.S. equities to tech, down to the subcomponents of tech, down to the stocks. And so I can stop at any one of those levels. There's nothing that said that when we were looking at this, that why not just stop at SMH, which is the ETF for semiconductors, because when it broke off of the 15th low, if we set this up, let's just use technical data. And here's your I mean, here's your chart as it's set up. You had a descending triangle, breaks out of it. It attempted to break here on the 22nd. It fully broke away from it on the 23rd. So you get an entry point. Even if you took your entry right here at 45.40, it's at 47.52. You're up $2.10. So that's about 4.5%. If you want to leverage it, you can use SSG, which is the ultra. Well, that's the short. There's not a long. I forgot. They only have a short. But if you want to leverage it, buy the options against it. So you can do different things with the same trade by getting into the trade the way you want to get into it, relative to a discipline that you understand. I use a lot of technical analysis for entries, and I think that that's just me. That's what I'm comfortable with. It's what I like, and it works very well for me. So use the things that allow you to find the pieces. Now, I want to go back here for 1 second because last night when we did the update, we posted KBE, which is the banks. And I think it was either last night or the night before, I wrote in the egg scan notes that one of the things that was interesting to me is what was setting up relative to the egg. It must have been the night before this. Is that we actually had two things setting up. One was banks, and the other was the emerging markets. Now, emerging markets did break out today, but it gapped higher, made it very difficult to get into the trade. We took the bank trade because I just think that banks are way oversold. You have a nice V-bottom reversal here. You had a nice breakout in here. I wanted to get above the 50-day moving average for the entry point, so we used the 3250 entry, which we hit today. We took the trade on banks early in the trading day today, and we're in it right now. So as far as the egg is concerned, and what we're looking at is, this may, I don't know where the table went. It may go higher, but it may also become a situation where, we get stopped out. So I'm going to have to go in tomorrow morning before the market opens, and we're going to look at our stop is at 32. We made 36 cents on, so it was up better than 1.1% on the trading day. But the question is going to be whether or not we can actually raise that stop and manage that position, which is away from tonight's topic. But remember, this is all about managing risk. It's not about who can pick the best stock or who can pick the best ETF. It's about who can keep the money they make. And so to me, pay for profits disappear really quickly in volatile markets. Now today, I have a lot more confidence exiting today, but I also got the jobs report at 8:30 in the morning. So I got to deal with the jobs report. If that number's bad, everything that we achieved today relative to improvements technically are going to go away. If that number's good, this may get vertical pretty quickly if we get a good jobs report. For whatever reason, everybody thinks that we need to jump into the market right now. And it's an extended market, but if people are willing to buy it and run it up, I'm willing to take it and run with it. But use the information that's put out there so that you can manage the positions as well as just finding the positions. Learn to manage the asset as well as buy the asset. And so there's a lot of things going on. Another ETF that we liked a lot is Cure. This is on the only ETF model, which was put out there, so which you can look at as well. Some of you don't look at all the models. You only look at a couple of things, but which is fine. I know that you have a limited repertoire of time. And you can see that today we hit the entry on FAS. As far as BIB, which is the biotechs, we hit the entry on those. On the only ETF, I do use a lot of leveraged ETFs, and it is trading cycles of generally 1 week to 13 weeks is what we're looking at as far as a holding period. But if you're looking for a lot of trading, then you should be looking at the only ETF model because it does trade quite a bit. And but you can see that we added Cure, we added Tech. Now these were added back off of these pivot points. QLD was added off of the 515 pivot point, was our first entree into Tech. As it kept going, we bought into the TECL. Then healthcare started going, and then the emerging markets sold off, came back. We bought back into the emerging markets. But and you can see the portfolios down here. But you can track along with each of these, because when I run these scatter graphs or scans, I will put them to the model they fit in. If they don't fit in a model, they go to the trading page on the nightly trading notes, so they'll be on there. And generally you're going to find anywhere from 3 to 8 trades a day that get posted somewhere within the website. And use it, but don't overwhelm yourself. Understand what the models, how they set up all of that. It's very important to do that. If you don't know what they are, send us an email. I mean, I want you to understand what you're dealing with. But there are things that are setting up that are very interesting to me as this market unfolds a little bit. And it's going to be very interesting to see what happens to the small caps and how this plays out. Now, TNA is the 3 times leverage, and you can see small caps were up 2.1%. This was up 6.2 on the day. You can use leverage for things that are shorter-term trades to amplify them in the ETFs, or you can go to the options and use the calls and make a synthetic trade using a synthetic stock trade using the options. But use what you're comfortable with. I mean, everybody's different, but don't get out of sorts over missing 1 or 2 trades. This is a trade today that actually goes along with IWM as far as I was concerned. This is something that we've been tracking, but for the last, whatever it is, 3 weeks here, we have not seen real estate show any signs really of breaking higher. If anything, it was setting up to break lower, because if interest rates were to continue to be lackluster, then that gets really ugly relative to what's going on. But real estate got a pop today on the upside, and there's a lot of reasons I don't have time to get into, but you had a nice little saucer platform there that we broke out of today, up around 59.30-ish. But yes, I added some to my own portfolio. Did I post it? No, because I'm not. I'd have to send an email to everybody and explain DRN intraday. Plus, we already own IYR and a couple others, and it's just watching and managing the positions you have and leveraging off of them. Utilities is another trade that had a nice V-bottom breakout around 42.35. We did that to the S&P 500 model. But all of these trades are coming off of where we start. The reason that this is in the weekly update is that that's what I do on either Friday or Saturday, is I start running all these, and if I see REITs are moving, then I go to this one and I scan back to the vertical bar. So if you're using Telechart, these are already set up, and then you can bring it forward. You can see what's moving within any of these. And you can, if you say, well, I want to see something a little closer, here's your last pivot point off of a low. You just scroll back to that pivot point, and now you can see out of those which is leading out of that, which is BXP, which was Boston Properties, and then you got some of the others were doing that. But look at the breakdowns in some of these. But you can see Host was one of the leaders, Equicor. So there's been some leadership within that, and you can see it within each of them. The bond rotation, is interesting to me this week because we have a potential breakdown in here. Use that as our pivot point and see if we can got enough days to scroll back. Yep. And you can see what's happened is TLT has sold off, and then it's kind of flattened off the last 2 days. But that, to me, is a concern, and it's something to watch relative to what's going on. You can see utilities drifting back to the top. IYR, which is the REITs, is the pink line, back to the top. And then AMLP, which I did buy today out of the sector rotation model because I like the dividends, paying a 4.5% dividend. And we've got energy moving, so the MLPs are energy related. It's a way to pick up the dividend and pick up a slower growth out of the energy sector. And sector rotation is a longer term time horizon model, so it fits into the model very nicely. But that came up off of these same types of scans. So you want to pick them up and use them the best way that you can in doing this. Now, you really have a lot of opportunities within the markets to find opportunities. Now, somebody's asking, can you use stockcharts.com? Free stock charts, I'm not real sure that you can do this with that. I have to log into that. If you send me an email and remind me, I'll go look. But this is one of the reasons that we went with Telechart originally. I know that there are others that allow you to do overlays, but generally you're going to only be able to overlay 2 to 5 of these lines at one time. Telechart only had 5 until about a year ago, and I begged Chris Warden endlessly to make it 10, which he finally did. And that's been, to me, it's been the greatest thing because we used to stack them on top of each other, 2 5s. But 10 is a nice number that works really well. If you send an email to jim@jimsnotes.com, I'll go look at free stock charts and I'll tell you if you can do it on there or not. And as far as some of the others, it's very limited to how many you can overlay. And I just find it to be very visual. The end of the day version of Telechart, I think, it's either $29 or $39 a month. It's not that expensive. You could buy it for a year. You pay 10 months, so whatever it is, $300. And I used to grumble about paying for it until I figured out that on some of the things I can do within here, it's so much time saving that it's amazing to me that it's worth it. As far as Murphy stuff, I'm not sure that Murphy's stuff does it on stockcharts.com. I want to say that the most you can overlay on the free is none, and I think on the paid version of it you can actually do up to 3 or 4, but I'd have to go look at it as well. I mean, there's a lot of things out there that free stock chart, somebody says, does allow 5 comparisons, so you only get 5 instead of 10, which, I mean, still, it helps you see the market. So if you go to freestockcharts.com, obviously it's free, and you can sign up for it there. I say quit being cheap and spend $390 and use the software, but that's just me. But I like tools that help me be a better trader instead of worrying about what some of the tools cost. I mean, obviously, real-time data is a lot more expensive, and I understand that. But this is end-of-the-day data. You don't really need to see this intraday. Matter of fact, intraday, it's more aggravating than helpful. But so I'll get off of that box. But I think that what you're seeing is that there's opportunities within all of this to really kind of take things and use them in a format that makes sense. So one of the things that I did forget to do tonight, which my brother reminded me right before we spoke, was the nightly update. And for those of you who are subscribers, the nightly update gives you, just a quick overview of what we see in the charts each day. So since I forgot to do it, I thought I'd just do it on the webinar tonight, and he can cut it out and post it for everybody. But to me, if you look at the market today, today was an interesting day from the standpoint that a lot of things transpired in the market today that were on the positive side. And I haven't been able to say that for a long time. And because if we just go back to the S&P 500 as an example, the positive to me of the S&P was we had one of the better volume days that on a up day that we've had in quite a while. So I thought that was a plus. If you look at the NASDAQ Composite Index and the Dow, you see the same type of thing. And if you break the sectors down, you see some acceleration. But what you saw today was money moving into the market, much more convincing than anything we've seen on the last 10 or 12 bars. So to me, you really did finally get some type of a catalyst into the markets today. And that catalyst really was the ECB. So with Draghi coming in and saying that he was going to throw everything at the European economy except for quantitative easing, but he also put quantitative easing on the table, what he did was introduce an ability right now for the markets to see that if the U.S. pulls back on quantitative easing, which they are, and Europe puts money into quantitative easing on a global economic scale, you're giving up one and getting another. That could maybe hinder the U.S. markets to some degree and help the European markets. But I think it really helps the U.S. markets because in a lot of ways, money flows is going to flow to the U.S. markets, and some of that money is going to come out of Europe. So if they put money into the float, European money is going to come to the U.S., and I still think it's a positive all the way around for both countries, both the EU, the European Union, and I think it's a positive for the United States. So I liked the news today. I liked what we saw. I liked the reaction of the charts. I liked the reaction of investors across the board. The fly in the ointment is tomorrow, which is going to be whether or not we see a jobs number that's correct. Now, I have confidence that because the ISM manufacturing number had to be reported 3 times on Monday until it was good enough for the market to go higher, that I'm really convinced that tomorrow, if we have to report the jobs report 6 or 7 times to get it so the market goes up, maybe that's what they'll do. But I'm getting to be like Japan with some of these economic data points. I'm not really trusting with China, that I don't trust some of the data points that we're getting from the federal government. And I don't like the fact that the jobs reports have been manipulated around. I don't like the fact that we've manipulated the CPI numbers and around, and we've done a lot of things that we've moved the numbers to make them look better than what they are. At some point, we're going to pay for all this. I don't know where that's going to be, but at some point we pay. Right now, you play. The market is really in a upward trek. Numbers good tomorrow. I think the market breaks higher. You saw some solid movements. Google is a stock that rebounded today. Amazon, off of some flimsy news, jumped big today, up 6%, 5.5% on the close. But watch that. Amazon could run. They got an announcement maybe of a phone coming back. These are in the tech scans that we ran earlier in the day. Some interesting things popping up in there. I still like semiconductors a lot, which we've talked about. And I still like software, even though it's kind of bounced back down a little bit. Networking breaking out today on the upside. I think you got to like some of that. And just want to look at what moved today. But you can see that Ciena Corporation gapped out today. And by the way, instead of wasting time running around the internet looking for things, page mark things that are easy. I use Yahoo Finance a lot just because it has a great news feed on top of it. And all you have to do is go in, and if you want to know what happened to Ciena today, I want to know what happened because I didn't look at it. And you just let it come up. And then you can look down at the bottom here of Yahoo, and it gives you the news reports as to relative to what happened to Ciena. Worth 25 following earnings, beat strong guidance. So they beat earnings and had strong forward guidance, so you get a gap higher. I say if it breaks above the 200 and keeps running, I would be interested in owning Ciena. But you have to look at some of the things that are happening within the market. Finisar moving back up. Some of these I would watch just because the way they're setting up. Not sure, Netgear interests me. Adtran I like, but the telecom sector is struggling a little bit. Not sure how much I'd play in that world. Interdigital broke up on earnings as well, but this has held up very well if it continues. But you get the point, is that you're starting to see movement within the components. So there's things that are moving that for me are of interest. Banks and financials overall. Financials are in a position that they broke above their previous high, so that's a breakout for financials. You want to know what's driving it. Regional banks outperformed money center banks today, which was kind of a surprise on the upside, but nice breakout in the regionals. And then yesterday you had a great breakout in insurance stocks. We covered that last night, but you can see it held up. So the insurance stocks are moving. You got some mergers and acquisitions on the insurance side, but you've got financials breaking to the upside, and I really do like what we're seeing in that space, and it's something that I would continue to look at even as we go forward to lead some of what we see right now. Commodities are still, not very attractive. You can see that they're on the downside. DBA is broken down. Base metals is kind of consolidating. Gold actually bounced a little bit today, but I'm not a big gold thing other than short. I do own a little bit of GLL, and I own a little bit of DUST, which is the gold miners. A little flag breakdown today. I probably got stopped out of that. I haven't looked at it yet today. But, one of the things that you see is the market is starting to separate. And what I mean by that is you're starting to find the leaders. And the leaders are going to float to the top, and the laggards are going to go away. Look for, on Draghi's news, Europe could break out and move higher. I like it. I like a lot of the countries out there right now. Thailand has been very impressive. India is just mind-boggling. And you can see the gap even higher today, up 3% on India. And then small cap, let's see if I can find small cap India has gone vertical, which, so you're seeing a lot of these. Some of these have never been posted on the website because you can see they never really had volume. Now there's kind of only volume there because everybody's jumping on the I want to buy some bandwagon. But they always come up on our scans. We buy some of these things because we can go in and create shares and expire shares that as an advisor that we have enough money to go in and do things like that. But if you're trading smaller numbers, use limits and buy them. You can buy these things. You may give up a few points here and there, but take what the market gives you, and it gives you a lot of opportunities relative to the markets as a whole. So in short, where we stand in conclusion is use the scatter charts to build what you're looking for and filtering through. Use software that works well for you. If you don't want to invest in Telechart, you can find other ways to do it. And I have to go back and look at my notes as other software packages that do this in some degree. And I'll be happy to provide those to people. If you want to send me an email, I'll shoot it back to you. And so look at the way the market's moving and then understand the story of the market. The story of the market right now is starting to unfold, and tomorrow morning we get another chapter of it with a jobs report. But you are in a positive market cycle. That's where you make the most money. You stay away when it's falling apart. So today is one of the first days I can walk away from the market and go, I'm ready to trade the market with 100% of capital and look at how it's going to unfold from there. So I hope you've gotten some out of tonight. I know I've kind of run all over the place just because I have so much I want to say when I get on these webinars. But use the tools that are there for you to use, exploit them, and make them better. Next week, we're going to do another webinar with another piece of Telechart. We'll take some of what we're doing here. We're going to build on this, and we'll take how to take this and build watch lists, and then how to scan through the watch list and set up entry, exit, and targets relative to all that, and how to do it within the desktops so that it's always in front of you and that you're not looking for it all the time. Because one of the biggest things that we see in coaching and teaching people is that their data is everywhere. They have to go find it in 20 different software packages. Find a way to consolidate it, get it into one software package. I covered last week about, one of the things of using notes, and that's one of the things, the pluses to me within Telechart, is that I can publish my notes right here within it, so that I just happen to know I put a note in here on DDD recently, and that I can go to the chart and then I can read my notes relative to it right there on the chart, and I can see that I have notes on the chart, but use the tools that make it consolidated so that you're getting what you need on a basis where you're not wasting brain energy running around looking at things that you can't find, and that's tough. Now, I'm going to conclude. I like to give you books to read because I think they help. One book I just finished reading this week is The One Thing, and it's great because it goes right in with the egg, and it talks about focusing on one thing and not trying to do 100 things, which we're all guilty of. And so focus on doing one thing and finding something that works for you. All of the scans that I talked about tonight, really I set up and built for the egg. Now, if they don't fit the egg, then they filter out into other models that we set up. And I think that's the way you want to run things on a day-to-day basis. So use the things that work for you. Now, one last thing that I'm going to forget is that the sector rotation desktop is available on Telechart. If you're a subscriber, you can get it. But you can get the desktops. It's a one-time fee for $40 to us, and then we enable you to have access to it. And just what you saw tonight is what's on there, and you can. And I'm always adding and taking away from it, so I'm always building new things. And if you want access to the new things that come out, we just add them back to the desktop that's already out there, so you get access to all of that stuff. So with that, have a great evening, and we'll see you, I think, next Thursday night, but you'll get an email relative to that. Have a great evening.